Good morning, everyone. This is Marshall Gittler, Global Head of FX Strategy here at IronFX Global, bringing you the morning comment for Friday, June 20th. Now, after weeks of trading quietly, gold and silver jumped yesterday, with gold up 2.8% and silver exploding 4.5% in heavy volume. Reasons quoted on the screen included thoughts that the Fed would keep rates low for a long time and the subsequent fall in the dollar, although, from my point of view, the 4.5 basis point drop in the implied interest rate on the long Fed fund futures yesterday really was hardly enough to justify such a sharp rise in metal prices. President Obama's decision to send some soldiers to Iraq as so-called military advisors may also have had something to do with the rise in the precious metals. In the background, the unwind of China's commodity financing deals may be helping to boost the price of gold, as Chinese speculators sell their physical gold and at the same time they buy back their hedges in the futures market. Now, this mechanism assumes that the paper market dominates the pricing of gold rather than the physical market, which seems possible given the difference in volumes in the two markets. The effect would probably be the opposite in other commodity markets affected by the Chinese financing deals, however, such as iron ore and copper. Now, silver's marked outperformance is no accident. First off, it's historically been more volatile than gold, so naturally it should outperform on the upside, just as it's underperformed recently on the downside. Secondly, positioning in silver is extremely light. According to the Commitment of Traders report, speculative investors were essentially flat at the beginning of June, which is the lowest position they've been since 2003. Gold investors, however, continue to be long. On the other hand, silver exchange-traded funds have seen a net inflow so far this year, while gold ETFs have seen a net outflow. That suggests retail is still bullish on silver, which may provide an underpinning of demand for the white metal. Finally, it's usual for silver to outperform gold when U.S. manufacturing is expanding, as shown by the ISM index being above 50. That's because silver has many more industrial uses than gold does. So it seems likely to me that if tensions in Iraq rise further, precious metals may continue to rise, and in that case, silver should outperform gold, in my view. During the European day today, Germany's PPI rate declined to 0.8% year-on-year in May, slightly below forecasts of 0.7%, but there wasn't any impact on the market. Eurozone's preliminary consumer confidence for June comes out later in the day. That's expected to be more or less unchanged from May. In Canada, the pace of headline inflation for May is estimated to have remained unchanged at 2% year-on-year, while the nation's retail sales are expected to rise 0.6% month-on-month in April. That news would tend to be CAD positive. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.